Hi guys, so I'm going to talk about the market. Here is the year end. Today is December 22nd, Monday. It's about noon, and I've got CNBC running here in the background, watching what's going on with them as they pull various people up. Markets generally up, and that's okay. But I just need to make one obvious comment. Uh, People will give you two different versions, but there is this thing called the January effect. It's all about how the market behaves in the first week of January. That's going to be, let's see, seven, so that's nine, about 2 weeks, a little less than 2 weeks. And that's supposed to be a bellwether for the rest of the year. And apparently it's enough people believe in it. However, sometimes you can have what some might call the Santa Claus effect, where the January effect comes a little early. At the moment, the cat's in the way. So the Dow is what? Around 48,000. And I'm surprised that there hasn't been more talk about the Dow being at 58,000. But, certain major truths still apply, right? They're what they call the big seven stocks. So that's going to be what? Facebook, Apple, Netflix, um, Google. I guess you could throw in Microsoft, Amazon. I'm sure I forgot somebody, but those are the big guys, right? And they're the ones who've been responsible for moving the market. And I will say that in my own research, you do see some of the secondary stocks going down while the market seems to hold steady or fluctuate a little bit. Anyway, I think all of this, though, is still um, what's the word I'm looking for? All this precedes what's going to be happening, let's just say in the first quarter, and that is that a lot of the stuff concerning the tariffs, the new provisions where people don't have to pay taxes on tips, and over time will start to kick in. We'll hear about it. And at the same time that that's happening, we're going to start to see the first wave of promised investments from last year, early in Trump's first year of the administration. And there will be buzz, there will be talk, there may be some mini bubbles as a result. Will most of it be around AI? Yeah, probably. I mean, the talk continues. And so, since I brought up AI, one can see that there is an important divergence, for lack of a better term. People have been talking about how the company OpenAI keeps asking for all this money. What was it, 1.15 trillion in investment just to get things rolling. And as some people pointed out, when you do the math, you just don't see how they're going to get their return on investment if you're pumping in that much money. Somebody's got to explain it. And so part of it is that with OpenAI, they are still giving it away free, and they need a larger subscriber base as far as their problem is concerned. However, the bigger issue here is what kinds of changes that we can expect um, in terms of capabilities. Now, Gemini 3 from Google recently came out, and some people have been oohing and ahhing over it. Um, okay, um, this is an extension of some of the capabilities that we associate with large language models, but it's not it's not general intelligence. And I still maintain that general intelligence is this elusive goal that will remain out of our grasp for quite some time. You know, what was her name? Colby, I guess, had the nerve to suggest not long ago that Japan stole the Martian, somehow got uh, a version of general intelligence. They do not. They do not. There would be more obvious evidence if it was true. And so we're kind of back in the same place, and you'll have people who continue to hype it and claim certain capabilities. But the reality is that the computing model will have to be completely different than what currently exists. So the NVIDIA style chips that are for heavy uh, repeated computations based on standard training models for neural networks will continue to be so energy intensive that getting to general intelligence will simply just consume too much energy. That said, we do have some open questions. So then I'll bring up the TPUs, the tensor processing units by Google. So they've been working on that for a long time, and now it seems like they're pushing for commercialization. There is a claim that there will be a plant that will just use TPUs and it won't use any of NVIDIA's chips. And how that will turn out is anybody's guess. Be sure that there's a lot of testing and scaling up going on. We should expect, yeah, we'll hear some surprise announcements, but still, I don't think that we're going to see anything that really constitutes a breakthrough that pushes the AI market forward. So the bubble will continue to grow, the opportunities will continue to be there, but I think a little bit more skepticism is going to start to creep in. And just to give you one example, tonight I will be talking about an AI program that was used by the Wall Street Journal to run a vending machine. As one title said, AI goes communist. So it started giving away um, stuff that was supposed to be paid for with a vending machine, and it was making other goofy decisions. I would not call them decisions, but maybe somebody else would. And it's just further proof that AI is not ready for prime time. So that said, turning back to the market, the economy, I think, is going to grow pretty aggressively. I think we have to be aware of that. It's there are too many positive things on the horizon. Now, can there be some rude surprise that ruins the party? Eh, I'm still looking for it. I mean, the real problems right now are the conflict between Ukraine and Russia. It seems to have hit a certain level of, a low burn as far as a conflict is concerned. But the question is, will Russia make some drastic moves or not when they are confronted with things like Europe, the EU pledging $90 billion loan to Ukraine? So um, things like that, I think, will shock the market at various points. But the fact that inflation is continuing to come down and that gap, okay, between the income of individuals and the price of houses will continue to narrow ever so slightly. We can expect mortgage rates to sort of keep sneaking down because guess what? The 10-year Treasury note has been gradually decreasing. Lately, it had a little spike, but it's going to keep going down over the long haul. So I think, or I'll go out on a limb and just say that by June, I think we're going to see long-term mortgage rates go below 6%. Easy for me to say. And yeah, so the demand for mortgages will go up, the ability to buy houses will go up. But the problem here is what we really need, I'm in that camp, we really need are forces that are going to push those housing prices down. All right, well, the next obnoxious thing to say is that if we manage to keep getting more of the illegals out of the country, that will reduce a significant demand factor for the real estate market. And yeah, then you'll start to see some, especially in rentals, you should see some concessions by landlords, and it will open up some possibilities. But the reality is, for example, where I live in Connecticut, we need to build more houses and not, well, let me qualify that. The story being told by the state government is a false story. It couldn't be put more plainly. And the notion of demand for real estate is still driven by the fact that there's low inventory, all right? Abnormally low inventory. And what's that? Okay. Hopefully that was not a problem. Okay. So that said, I'm bullish on 2026. And but you got to pick your targets. All right. There will be some companies that crash and burn. I'm not sure I have comments for like the consumer goods sector, the home sector. I've already said a few things about that. Transportation is obviously going to go up because demand for product is going to increase. What will be the other big one here? Communications. Um, yeah, I mean, we have this communications, entertainment. Yeah, there's going to be a lot of things that are going to benefit from this year. So, all that said, I'm in the bullish column. All right, and that'll do for now, guys. So, be back later.